All right, let's look at the monthly for SPY. So SPY has a strong resistance level right through here, about 573 that we need to break through. If we break through that resistance level, we can test our trend line at 575. So a couple areas, key areas to keep in mind. See if we can break and get that bull flag break to head on up. Looking at the weekly, 569 or 545, that's kind of the range for our weekly candle to see if we can get a breakout in either direction. Heading over to our daily chart, this is a big rejection zone. So we have tested it multiple times through here and just not been able to break above. We have tested this trend line multiple times and we stopped at this trend line on Friday. So unable to clear our rejection zone and unable to break below this trend line. So this is really more of our major trend line for next week. So let's see if we can hold that 555 area moving into Monday, or are we going to push higher and clear that 571 area so that we can get on top of this rejection zone and potentially push higher? Looking at our 4-hour, we were looking at this last week as well. This is definitely getting into a little bit more of a squeeze. So that could be setting us up for a rejection or reversal. So if we push higher and potentially test up here, even we may not even need to do that. We could just start coming back down, test this trend line through here. And if we do not hold, this can be the signs of a reversal and more downside to follow. So just keep that in mind. This is why we trade level to level, right? We are looking in both directions for what the potential is heading into next week. So let's see what we find out. Let's look for this 571 break above or 555 below for more direction. Anything in the middle, you can use those two as more like a support and resistance. Reminder, it is OPEX, so please size down and please be safe. There are reasons that a lot of people just take off for OPEX because it can be very tricky to trade.